tax credit, they have to file a tax return with the federal government every year, or they lose the ability to get the tax credit going forward. You can take the tax credit in 3 ways. You can take it in advance, based on what you think your income is going to be. You can take a partial credit, or you can take it next year, tax time next year, which is, in my opinion, very unlikely because health insurance is so expensive and most people wouldn't be able to come up with the amount of money to pay for it on their own and then wait till tax time next year to take it. As I mentioned, you have to kind of guess your income. And the way that these tax credit works is a little bit different from what we think of for other tax credits. You guess your income. If you take it in advance, instead of that tax credit coming to you, it goes directly to the insurance company. Now, if you're wrong on your income or there's a minor life change, then you owe the IRS money. So it's kind of a convoluted way that they've set up this tax credit scheme going forward. And very, very minor life changes can mean a big tax impact going forward. Things like a kid going off to college, and they go on to the student health insurance because they're going out of state. All of a sudden, your household looks a lot richer, even though nothing changed. You just have one less person living under your household. Getting a promotion. Maybe your kid picks up a few extra hours at the end of the holiday season, which gets added to your household income, perhaps, throwing you over these little income cliffs that are in the law. Getting divorced. Very minor things that I think most individuals would assume. Getting married, huge marriage penalty that's baked into Obamacare going forward. And the reason I highlight this is because I'm not sure Obamacare assumes that people's lives are static, that they're going to make the same amount of money every year, and they're just going to qualify for the tax credits, and they're just going to stay the same. But for so many industries, that's just not the case. A lot of people don't have control of how many hours they get and how much money they're going to get. And so let me give you just one brief example. At FGA, we wrote a report, which, if you're interested in this, I would encourage you to read. We made it very accessible. It's written in story form, just 5 stories, explaining how these tax credits could end up hurting people if they're not fully aware of what's happening. And the way that people can avoid this big tax increase is if they have to report every minor life change to the exchange. So if anything changes in your life, you got to call the exchange. From my opinion, that's unrealistic. Most life happens, we're busy taking care of our kids, trying to run our business, whatever it is. And so I think a lot of people are going to hit this. And probably the most severe case of this is for people that are right up near that 400% of the federal poverty level. If they make just a little bit extra money, putting them at 401, Congress actually changed the law after it was passed. Nobody knows this, but they actually changed the law that those individuals have to pay back the entire tax credit. So in some cases, let me give you an example. We wrote a story. There was a self-employed, I think he was an engineer. He had a family of 4, and he was doing pretty well. Decided to take the tax credit. The insurance was so expensive that he took the tax credit, and it was worth almost $12,000 to $13,000 for his family. He picked up a teaching job at the local community college, made a couple $100 extra bucks, and put him over the income cliff. And all of a sudden, come tax time, he realized he owed the federal government back that $12,500, which he didn't know where he was going to find it. He had already budgeted for his life for that year. And which brings us to everybody's favorite topic here, which is the IRS. And I want to just spend a couple minutes talking about what role the IRS will play in these tax credits, because this has not been reported absolutely at all in the media. And we've heard a little bit about the controversial individual mandate, and that the IRS will play some minor role in that, but actually this is where all the action is going to be on the tax credits, and I'll explain why. The IRS is given 47 different provisions in Obamacare going forward. A lot of them have to do with increasing taxes. There are 18 new taxes. They'll raise about $1 trillion over the next 10 years in new taxes. That's some of what they do. But largely, they're there to enforce, to administer the tax credits, and then when there's a life change and somebody owes money, to collect what's owed. And the part of the tax code that this falls under allows them to use all their tools that they do for any back taxes. So penalties, late fees, put a lien on your house, garnish your wages, take money from your bank account. In essence, they basically dictate the terms for your repayment going forward. And what's fascinating about this is we've done a number of focus groups with people that could potentially qualify for tax credits. And a lot of them told personal stories about past involvement with the IRS, and usually it was not positive. And when they heard about this provision, almost universally they said, you know what, I'm going to wait a year, at least a year, to see how this plays out. I'm going to keep my private insurance, I'm buying it on my own. I'm just going to keep it for one more year just to make sure I know, before entering into this relationship with the IRS, how this thing all plays out over the next 14, 15 months going forward. They're going to have a lot of that information we talked about earlier. It goes to them along with 4 other federal agencies to verify the information that you provided, and they'll be checking whether the information that was on the enrollment form matches up with what your tax return from the previous year or the next year are, so that they can go after you. And what we found in our research, we were curious, what role has the IRS played in very similar tax credits in the past? And there's been a couple that are somewhat similar, and the one in particular that was of note is the adoption tax credit. Now, perhaps somebody in your family, extended family, has used this, or you've known somebody who has done it. Big bipartisan agreement, everybody wants to increase adoptions. But when we looked at how the IRS enforced that, which is a similar value for a lot of people to the Obamacare tax credits, we found a report by the internal watchdog at the IRS that she submitted to Congress, and it was scathing against the IRS about how they ran the adoption tax credit. 70% of people who took the adoption tax credit were audited. 70%, that's almost unprecedented. Most of them lasted multiple years, and the watchdog went after the IRS saying, you didn't even check when you requested additional information if it was in the original paperwork that you put it through, you delayed payment, you put these people through a terrible agony whether they were actually going to get the adoption tax credit or not. And she said at the end of the report, in a very telling manner, if you don't learn lessons from how you administered the adoption tax credits, you are going to mess up the Obamacare tax credits. She made the link for everybody to be very clear that the magnitude and involvement for the IRS, and the IRS themselves have acknowledged this is the biggest change in tax policy for them in probably 50 years, are the tax